thank you so much, everyone, for joining us today for this panel. This is an event that we ran about a year ago, and I'm really excited to get an even bigger group together for this conversation, given it's such an interesting topic. In terms of what we're going to be covering, this investing panel includes a really rich group of panelists who you see in front of you, and they are all active Colorado-based investors. Some of them have institutional knowledge and participate on behalf of client money, and others are participating on behalf of themselves and their own wallets. I do a little bit of both. I guess no, sorry. I do direct investing, meaning I participate myself, but I also invest as a part of angel groups, some of which are on this call. In terms of the intention today and what we're going to be talking about, we really wanted to speak to areas to get you more confident and skilled in this asset class. Of course, this asset class is something you are hearing probably a lot more about these days or over the last couple of years, as everyone, it seems like nowadays, is launching or starting a business. We're really excited in today's conversation, and really the intention of today was, let's open this up and let's make sure that we're getting a diverse audience and participants at the table. Women identifying, any background, we're an inclusive event, but we love the idea of getting more people into investing because a lot of times it feels like kind of this old school thing where you had to know someone or you had to be in a family to do it. But the truth is you don't. So we're going to talk a little bit about that. So quickly, just to look at the agenda of what we're going to be reviewing and talking about, we're going to open up the floor for intros to each of the panelists shortly. Next, after that, we'll be diving into defining what is early stage investing. How should you think about it? We're going to talk about who it's for, how you should think about getting into it if you're interested. We're going to dig into concepts that are really critical to understand it, such as equity and ownership. Also the basics of diligence. In the last maybe 10 or 15, maybe 20 minutes, we'll open it up to live Q&A as well. We have a good amount to cover, so I may kind of move us along throughout, but we will follow up and recap and be in touch over email if we're not able to fully summarize things today. So if you were looking at this image in front of you, you may have already smiled. What is this image I've captured on the right? It's a screenshot from the She's Independent Instagram account yesterday. And the caption reads, "Why can't girls in short shorts be deal makers?" I did not approve this image with any of our panelists, but I thought it was something fun to kind of kick off with and basically put the idea out there. What do you need to be a deal maker? What do you need to invest and to have a seat at the table? We're going to talk about these things. And listen, you don't have to have an established look. Anyone can do it. So I'm Natalie for a quick intro. I'm going to be moderating, and I've done a lot to kind of put this event together. Would love to hear from you out of this. I am the founder and lead mentor at She's Independent. I'm a firm believer that there's a ton more work to do to achieve gender equity or the semblance of gender equity in and outside of the workplace. Establishing our finances is a key and critical component to developing confidence, both in our professional selves and in our personal lives. And I have a background that spans finance and technology, and I've been an active angel investor now for about a decade. So really excited to bring you this event. And with that, I'm going to kick it off to our first panelist who I'll introduce, which is Amy. And I'm going to ask that each panelist presents or gives a little bit of background in just about 25 seconds or so.
Thanks, Natalie. I'm Amy Brandenberg, and I've been in Colorado 8 years. I am a director at Denver Angels, helping build out an angel group here in Colorado, and also an investment analyst in the stock market during the day. So I saw the Fed just made an announcement while we were starting this presentation, but I'm excited to be here and have learned so much from Natalie and Carrie, who are also members of the group, and just really excited to talk about angel investing and something I'm really passionate about.
Great, thanks so much. And maybe with that, Carrie, if you want to dive in.
Great, thank you. My name is Kyrie Lamack. I have been in Boulder, Colorado for 3 years now, so I still feel new. I've learned a lot from Amy and Natalie, and I'm excited to meet the other panelists today. And I serve as an advisor, mentor, and investor in aerospace startups, as well as working with organizations like Denver Angels to be able to invest. And I'm just excited to be an angel investor and to see more angel investors out there.
Thanks. And my dog is introducing herself. With that, Emily Klein.
Hi, everybody. My name is Emily. I work with the Rockies Venture Club, another Colorado-based angel investing group. I landed in this space with a passion for impact investing, and I really see early stage startups and capital access in early stage startups as the most important catalyst for promoting diverse, sustainable, and creative companies. I really believe in this strongly as my theory of change. So a lot of where I enter this space comes from a point of view of increasing access to entrepreneurs as well as investors, changing the faces of investors, angel investors, as well as institutional. So really excited for this conversation.
Great, thanks, Amy. And Brian, let's have you jump in.
Yeah, hey, thanks for having me. Brian Parks, CEO of Bigfoot Capital. So I've been in Colorado, 15 years now, just keeps ticking on, which is a good thing. And in the early stage, predominantly tech scene and community for about 11 years. So Bigfoot's a little bit different. We provide debt capital to early stage technology companies and, align with folks like RVC, groups like RVC and Denver Angels and other angel investors. And my wife and I just recently made our first angel investment other than funding companies I've started. So
Very cool.
Excited to be here.
Thanks so much. And then Paige, let's have you jump in.
Yeah, hello everybody. So my name is Paige. I'm the founder and CEO of Point Solutions Group. I've also started recently 3 other companies here in Colorado. I've been here in Colorado about 4 years, all in and around tech. I have been an angel investor for 10 years and also have funded my own companies and then right in the middle of a fundraise for another one of my startup ventures. So all aspects of early stage investing and capital raise.
Very cool. And both sides of the table, which I know Brian also has experience with, and I'm sure some of the participants here are excited to learn about the mindset of the investor. So thanks for sharing that. Okay, so with that, we are going to dive into the content, but quickly let me mention, you are able to ask questions live. You have the ability to upvote other questions. And while we will leave room for Q&A later on, if you have questions in real time, feel free to drop them in the chat. And that's something we'll try to address or we can address later on. So in terms of where we're going to start, let's define what is early stage investing. There are different vehicles or different ways to have access. So let's start with direct investing. And with that, it looks like Carrie and then Amy, we're going to maybe dive in and share a little bit about the angel side as they are both involved with Denver Angels.
Sure, I'll go first. So yeah, just at a very high level, angel investing is kind of like what you see on Shark Tank sometimes. And it's the really early stage part of investing where you provide capital in exchange for ownership in a business. It can be very risky, but a lot of times it comes in many forms. I think angel investors themselves would probably define different stages of it, but a lot of times it's right after a friends and family round. The company's really still very early stage, but starting to get some traction. And so angel investors are willing to come in and provide their own capital. They do have to be accredited investors, but that can also be a group of individuals like Denver Angels. So we bring together a lot of individual investors and create one big check for a founder that we then send over to them and support their company.
Great. And I might even add to that, there may be some friends and family or some revenue traction first, but doesn't have to be, right? Some companies will actually go out, and angel may even end up being their first avenue. So just mentioning in terms of one of the deals I'm actually looking at right now, or 2 of them. Anything you want to add to that, Carrie? Well answered. Okay. Let's talk then indirect investing. So Brian, as a fund investor, do you want to dive in on that?
Yeah, sure. So indirect, we have other people's money. It's not all my own money. So we have a fiduciary responsibility not to lose their money, which is an interesting kind of distinction. We're not an equity investor. We're a lender. So our primary job is not to lose our capital when investing into these companies. Whereas with equity investing, you could assume that if you make 10 equity investments, you're going to lose money on some subset of those. It's just a fundamentally different model and make it up through excess returns in the other ones. So that's what we do. We go out and form capital with a thesis basically and try to convince people or institutions to put their capital with us to fund that thesis. That's what it is.
Yeah, that's super helpful. And it's interesting, that you're on the lending side where I think a lot of us are thinking equity. So I appreciate you defining that. Emily, I know that there is a fund structure within RVC. So if you want to dive in and maybe share a little bit about that and how that works.
Yeah, so thinking about ways to get involved as an angel, we were talking about direct versus indirect. I think given that almost all of us are a part of an angel group in some way or another, angel groups really help increase access to both this direct and indirect side of investing. As angel investors within a group, we use the power of the group to invest our own money in our own deals, making our own decisions. That being said, I know RVC operates a couple of actively managed VC funds that invest alongside RVC, invest alongside our angels at this early stage. So same stage, same companies, but through a different model where an angel investor can invest lower minimums. Typically, you'll see angel investors come in at about 5 to 10K for a deal within our angel investor group. We have funds that you can get in for as little as 25,000. So that allows you to spread a lower amount of capital across a wide variety of deals. As with any other part of your portfolio, diversification is the name of the game here. So finding kind of creative or different ways to get involved and diversify your investments. You don't want to put everything into your one or two companies. So angel groups can often spread the line between that direct as well as some indirect options.
Great. And I think, one of the comments I made earlier might have been a little confusing. So let me, I guess, speak to that, which was, you can do direct investing on behalf of yourself. You could find a deal, source a deal, just kind of invest in a deal. But there are a lot of benefits or a lot of things that, Emily just touched on regarding angel investing, which is if you are doing it as a part of a group, you might have a lower, deal size or check size that you can write. You may be able to then learn a lot more throughout diligence. And, there are different advantages to doing that direct investing, either alongside an angel group or even looking at a fund structure that Brian and Emily both spoke to. So thanks so much.
Can I make a quick side note, Natalie? Some folks may have more experience in the public markets, maybe you buy stocks, maybe buy mutual funds, right? So, individually picking a stock, which may or may not be a good idea because you don't have the amount of information that people that do that all day, every day have, would be direct investing, right? Investing in a mutual fund is in effect indirect investing, a bunch of stocks that you're trusting some fund manager and their team does all the homework on. So
yeah, no, that's a great point. And the risk reward of being in a very concentrated investment, right? It's very different than having that diversification of, or, allotting your capital across various companies. So thanks for making that point. Now let's dive into, who is this appropriate for and how do people start to think about getting into this? And by the way, we haven't yet spoken about risk. I think it's something we definitely want to define and speak to. I should also make the point that we are not sitting here as financial advisors telling you what to do. We're really here giving you ideas, and we're here to, be a kind of a sounding board if you are interested or want to ask questions. But let's talk a little bit about who is this for. So maybe we start with, does anybody want to give the quick definition of an accredited investor to kick us off? All right, no worries. So, did someone just come off? So this, sorry.
Do you want me to give a definition, Natalie?
Yeah, sure.
So per the SEC, the Securities and Exchange Commission, that regulates all of the securities that we can buy, right? These private offerings, these private securities, like what you would invest in early stage startups and startups that you can't find on a stock exchange. There's a lot less disclosures around that. These companies have a very low barrier to what they have to put out about their company, audits, so forth. So these are inherently riskier securities because they're less transparent. An accredited investor is someone who is knowledgeable or wealthy enough to absorb the risk of those unregistered securities. So per the SEC, the current definition is 200,000, 200 or 250.
I always mix that up, but it's 2 or 250 in annual income. Last
200 in annual income, 300 if you are investing with your spouse, or you have a net worth of $1 million, not excluding your primary residence. There is a new caveat to this. As of just a few months ago, the SEC is looking to expand that along this idea of knowledge. You can now take some tests, things like the FINRA Series 7, Series 63 tests that show that you're a knowledgeable investor, as kind of this protectionary measure of the SEC to say that even if you don't have those financial assets, you show the knowledge to invest in these unregistered securities.
Yeah, and just to jump in on that, a friend of mine who was interested, she actually wasn't aware of the updated definition, and then we realized, oh wow, you are accredited. So it's good to be aware of, I guess, the evolving definition of what accredited is. And of course, if you're interested and excited about what we're chatting about today, even if you're not accredited, you can start thinking about mapping a path to get there. So I think something that would be interesting to chat about is a non-traditional path to angel investing. I know Amy, this is something that she has gone through. So Amy, if you want to share a little bit with us around how you got into it.
Yeah, sure. Yeah, so I would say I don't meet the accredited definition by financials, but I've been involved with angel groups now for over 10 years. And I just started out as an analyst when I was in college for Baylor Angel Network. And that gave me the exposure to learn all about it. I mean, I just tried to ask every question. I made my own diligence checklist. I would have to talk to investors about why they should invest their money in the deal, even though I wasn't. That was intimidating because it was real deals, but it forced me to learn. So I'm so grateful for that experience that I had. And then just throughout the years, kind of a non-traditional approach, I've just been building cash through other ways. So I worked in tech for a long time. You can get restricted stock units or, stock options. The company I just recently left that I loved, they're supposed to go public this year. I'm not counting on that money, but if I do, that's extra money that I can put towards angel investing in the future. So that was just kind of stepping stones, was learning about it and then finding ways to generate cash. I'm also a stock investor. So I have, do some equity trading, no GameStop or AMC. I'm not into that, but yeah, so it's just been a non-traditional way. But then last summer, I volunteered with Denver Angels and was so fortunate it turned into a partner role for me. Had no idea that it would become that, but I'm super excited. And so now I am a knowledgeable employee, as Emily talked about, through a couple different ways, and I'm able to invest and I have capital for it. Talking about financial advisors and risk, you absolutely should talk to your financial advisor about how much you should allocate towards that. But for me, it's been non-traditional, but I love it. And I'm so grateful that I've found ways to just dive in and get where I'm at now with the angel world.
Great, thanks. And you point out a really, important thing to realize, which is if you have ownership in a company, even if you didn't write a check to get there, right? Maybe it's company stock or some other avenue. Maybe it's participation, working as an investor, you still have the exposure. And so you're still an investor. So many of you may be listening, maybe you haven't written your first check, but maybe you have exposure in another way. Still exciting, still a great learning experience. Anyone else want to jump in on that one?
So I'll just jump in too to say, talking about how to become an angel. And in my experience, I was working with a number of companies and a friend of mine said, you can write a check. And I was like, wait, what? It hadn't even dawned on me that I could be an angel because I thought, well, what do I know about investing? And yet a friend of mine was a girlfriend. She said, you know enough to be advising these founders. You absolutely know enough to write a check. And if she had not sort of pushed me to do that, I don't know that I wouldn't be on this panel. And I don't know that I would be an investor in a number of companies now that I'm really thrilled to be part of. So as scary as it sounds, at least it's felt scary to me. Sometimes that's just what it takes is having the courage to write a check and knowing that nobody's keeping score. So nobody's going to know how your investments do. Nobody knows if you're an investor if you don't tell them. So that was part of it. I was like, what if I mess up? What if I do a bad job? Well, really the biggest issue is the risk, obviously, of losing that capital. And where else could you have put it? All of those things. But at the end of the day, you're the only one who gets to keep score. And I really enjoy that part of the process as well.
Yeah. And Carrie, thanks so much for jumping in on that. Willingness to write a check is huge, and by the way, the diligence and what you can learn when you're doing an advisory role or, helping a business, you can see if they're taking off. You can maybe get really good terms, or maybe you negotiate equity on behalf of, your advisory or strategy work if it's something that has, longer duration, which I'm currently, looking to do now because I'm working with some interesting businesses.
And I think
oh, sorry.
a little bit further on, we'll talk about advisor equity and what
Yeah, absolutely. And Paige, I will just call on you quickly, even though I know we've chatted about this one in depth, but just given you are on both sides of, the ownership piece, feel free if you want to dive in or add anything else.
Yeah, no, absolutely. I think the willingness to write a check is definitely there. For me, I've been a bootstrapped CEO. I've now started from the ground up with multiple companies. And at the same time I was doing that, I was also putting my own money in other investments. And I think, looking at things that you're passionate about, people that you're passionate about backing and supporting, industries. I know, Emily, you mentioned impact investing, right? For me, I'm super passionate about women-owned businesses. So myself and a partner have started a women's investment portfolio where we're putting our money where our mouth is, saying, if we want to inspire other female CEOs, we need to help them by our willingness to write a check. But at the same time, when you're trying to raise angel money or friends and family rounds, it's the same thing, right? That I look at as an investor. They need to see your passion. They need to see your excitement. They need to know your vision and how you're committed to what you're trying to do. And, being open about expectations, returns, and also about timeline. So I think transparency in investing, in my opinion, on both sides of it is critical. And yes, it's scary. You get this sort of gut feel like, wow, I'm about to write a check that it might not be coming back. But that piece of it is exciting, right? Because that you're impacting somebody, hopefully in a.
Oh, can you wait? Okay, sorry. I think we had a brief internet connectivity thing, but that's great. So thank you. Thanks for weighing in on that.
Sure.
So, next let's talk about asset allocation, personal finances, risk return. We've maybe said some things that scare you a little bit, such as it's risky, and it's good to be scared. It's good to be informed, right? But let's dive into that just a little bit more. One of the things that I want to mention is, with Denver Angels, I was pretty excited or interested to learn that they were investing in businesses where there was already significant revenue traction. That was something that was new for me on the angel side. Meanwhile, I have also invested in and looked at, and I'm actively looking at some deals that are pre-revenue, but it's been really interesting, right, to understand the scope of what you can do on the angel side of things. And that concept of you have to take risk, right, to earn. If you just have money, sitting in your bank account or savings account, right? Sure, it's not risky, but it's not going to necessarily grow. So just understanding these concepts, and then of course working with a financial advisor or otherwise, so that you can start to get more comfortable with it. But maybe Emily, if you want to dive in and talk a little bit about your portfolio and investment thesis, I know that's an area that you feel strongly about.
Yeah, sure. So I'll start off by saying that kind of what we traditionally coach with angel investing, you're not putting more than, at least at the beginning, 10% of your overall investment portfolio into this. And like Natalie, like Paige has said before, you have to be okay with that going to zero. It's inherently a risky asset class, but it's also a very long horizon asset class. Even if you do see that money, you might not see it for 5 to 10 years. So 10% of your overall allocation is kind of the conventional wisdom here. Beyond that, I think there's a lot of opportunities for individual angels to explore their own investment theses, what you care about. If you're like me, you care about investing in women-owned businesses. I know some of our angels have pivoted their investment theses in the last year. To one of our most active angels is now saying he's only investing in people that don't look like him, not old white people, old white men. So there's a lot of opportunity that angels have that you don't get in the VC world. Brian's talking about this fiduciary responsibility you have as a fund manager. Angel investors can play outside of that. And this is why I, again, love this entry point of impact investing. maybe you're able to absorb a little bit extra risk or a little bit longer time horizon as an angel if it's a person or a demographic or an impact that you care about within that company. So this could be a whole webinar topic on its own, but as an individual angel, having an investment thesis around who you want to invest in, how you want to invest in them, what kind of companies you're looking for is what's really exciting for me in this kind of angel world. You're investing in your community, you're investing in people, you're not just sending this to Wall Street or sending this to an LP. So again, there's a lot more around this whole investment thesis, but there's ways to incorporate impact in a way that you can't achieve in a stock market, or you can't achieve in many other avenues that you put your money.
Yeah, you can be really intentional and conscious with where your money flows, which is such a cool concept. I don't know, Amy, do you want to jump in and speak a little bit to this topic as well?
Yeah, I was just going to add one thing that I recently learned about that I was like, how did I never know this? Because I just assumed all investors just have this big pile of cash, which many do. But there's another way that you can start investing, and it's through a self-directed IRA. It's a lot more complicated. There's a lot more steps involved. But if you're part of certain groups or funds, you can actually use a self-directed IRA. Like I had a 401k from a former employer. And normally I would have rolled that into my next one or, a chunk of that into an IRA. But instead I went with a self-directed one. And now I'm able to kind of go back and forth between a cash investment and then an IRA investment. And that helps me spread out the risk. And like Emily said, some of it, the returns will be in the next 5 years. The others will sit in my IRA, but then I can reinvest that over time. So just know it's not just always one way. There's a lot to discover if you talk to an advisor or people that are investing, that they can teach you how they got started in the beginning.
Yeah, that's all really good to know. And again, flexible ways to invest. So speak to and work with your financial advisor or otherwise, but a lot to uncover there. We've talked about, you may be writing off your full investment. Why is this something that's interesting? I love that people are talking about impact. It's something that really drives me, and it's something that increasingly, kind of aligns my early stage investing checks. So, I think that that's clearly an area that a lot of us care about, having a seat at the table, right? What is equity and inclusion, right? It's not just having a very tiny piece of ownership as a employee at a company, but maybe bigger investment, through an angel check or otherwise. So I guess another concept is, and you can feel free, I guess Paige might be the one to answer this one, but it might be easier to write a check than start a business, or Brian might speak to that one. Feel free to wave or jump in on that. But that's something that I feel is true.
I'd love to hear Brian's thoughts on this first.
Maybe, I don't know. I guess I've chosen the path of starting businesses rather than writing checks to myself, if that makes sense. Rather than to others, I have more control of myself and possibly more knowledge of myself. So I get, for me, and what that means is I'm very risk on personally. So if I've got a bucket of money to play with, an inordinate amount related to some folks is on me, right? If I do a bad job building my business and managing other people's money, guess what? I no longer have a job or income. So therefore, maybe my 10% allocation to other angel investments should be more like 2 or 3. So, in being in a fund manager, so to speak, I still am direct investing. So maybe I scratch my itch for angel investing through other people's money, right? It's me going out and finding the companies, finding the founders, building the relationships. It's just not my capital. But I still have a large degree of risk in that it is my company and my livelihood.
Yeah, when Emily said 10%, I was like, wait, so you're not recommending putting your entire life savings into a startup, which is what I did. But just to give Brian in Bigfoot Capital, I spoke to him about their work, and from a debt financing for an entrepreneur, right? Not giving up significant equity, not giving up control, right? In certain situations, the debt financing mechanism for growth companies in particular, I think for Bigfoot in the tech space, which is also what I'm in, is tremendous. It's a lever that we love to be able to pull as CEOs and entrepreneurs. And sometimes it goes in conjunction with other angel investing or other forms of capital, which can be really, really helpful, right? You can raise significant amounts more of money just in different ways. But I too am a serial entrepreneur, and so I have invested and written significantly larger checks to myself. But I think one of the things that also excites me most about angel investing, and for me, it's really advisory services for equity. So I'm putting my time as a form of capital to support these organizations. Sometimes that goes with a small check, right? So a board seat, a small check, and some equity. And I think that combination has been really powerful for me. And I think helpful for some of these other entrepreneurs that need some help in saying, how do I get going? And can I bring somebody into the fold that's done this before and has stepped on the landmines that hopefully they can help me avoid.
Great. Thanks so much for weighing in on that. So maybe I'll open it up, and really if any panelist wants to jump in on anything we didn't touch on around why you do it. I know, again, we chatted on impact, we chatted on a few other concepts, but if anyone else wants to dive in or elaborate, I welcome that now. Okay, Carrie, I'm gonna call on you.
I mean, I guess, so from my perspective, again, it comes down to one of the reasons I love angel investing is it gets me more in tune with what I already love. So I love space, aerospace. So this is the first space shuttle launch. I have a whole personal story about why this is here. But being able to be involved in aerospace companies keeps me up to date. I'm learning a ton. I'm being able to have an impact. It really, and I'm excited about it. So I, sort of wake up every day like, ooh, what's happening next? And I think it's really important to combine your investment strategy with whatever your personal interests are, because you're going to be a better investor when you care. And you're going to also be a better support system to the company. And I think we've sort of talked a little bit around like, writing a check is one thing, but being able to advise and provide support or whatever other resources you have, it doesn't just have to be a check. And whatever your superpower is, bringing that to the leadership or the founders of a team can be just as important as writing a check for them. And that could be your network, it could be a special skill you have, whatever it may be. I think that's really important as well. Great, thanks for weighing in. And just looking at timing, I'm going to move us on to how does equity work? So there are different structures, different ways to get ownership. I know we talked about types of investing before, but now we're going to get into the cap table. So I guess I'm going to hand it back to Brian if you want to tell us a little bit about the cap table and what you think that people should know about it.
Don't sell any of it if you have one. Just kidding. So there's 100 points on a cap table is the way I always think about it. And there's never more than that, right? So when we're talking with founders, even my own business, I'm reticent to sell my cap table. And I always want optionality around that because that's ultimately what I'm working for over the long term, right? So it can be really easy to sell it willy-nilly over time and look up and not own that much of your company as a founder. As an investor, you're buying into that cap table. So you're buying an ownership percentage, as we've discussed, in exchange for cash. And that can come in the form of a few different forms. It can be straight equity, common equity, preferred equity, or it can be, a convertible note structure or what's called a safe note, which is kind of a future equity interest. That's not an equity interest day one when you buy in. So that's kind of the deal. That's kind of the deal there. And as a lender, we don't come onto the cap table. So our mantra is, hey, we're in the boat because we want to be in the boat and we don't just want to be transactional, but we're not on the cap table. So we don't take any of that 100%. It's for other people. It's for angels. It's for venture capitalists. It's for founders. It's for team members. It's for whomever. So just to make that clear.
Yeah. No, thanks so much for diving in. And listen, I think for somebody who's newer to understanding the cap table and ownership, the amount of times I've heard somebody tell me, this is how many shares I have in a company. I'm like, that doesn't matter. It's ownership, right? It's valuation based on that ownership. So really, we want to get you in that mindset and understanding that the cap table and ownership, that's how you communicate. Or maybe it's, a percentage of, or, what happens in the future based on the ownership structure. But I think that's an important concept that a lot of new people struggle a little bit with. But Brian, your overview of that was really helpful. So thank you.
Yeah, sure.
Yeah, and maybe let's talk about a few more ownership structures, excuse me. So maybe from the Denver Angels side, Amy, do you want to dive in and speak a little bit to the types of vehicles, given, we are on the cap table, at Denver Angels. So maybe speak a little bit to that, what structures you like and what you see.
Yeah, sure. I should also say that Carrie and I talk about this stuff all the time. We just need to have like constant discussions about term sheets and pro rata rights. There's so much terminology out there that we could spend hours of panel discussions and one-on-ones talking about this stuff. It's very intimidating. So it's like, just start somewhere, start small. There's a lot of great books out there, and I can recommend some at the end. But as far as Denver Angels go, so far in our portfolio, we like to look at priced equity rounds. We have done some convertible notes. I think there's a lot of reasons for that, but for our investors, we have a lot of individual investors that are part of this syndicate, and for ownership, that's just the best way we've been able to approach it. And we're very valuation sensitive. We're very involved in negotiations. A lot of times we co-invest in a round that RVC invests in, or maybe they were an earlier investor and then we're coming in the follow-on round. So it varies case by case, but that's usually what we look at. And as Natalie mentioned, we're kind of more later in the stage companies that have real revenue traction and are kind of getting closer to the Series A point. But there's a lot of flexibility that we have with that, it makes it fun.
Great. And then maybe I'll hand it over to Carrie. Do you want to speak to pro rata rights? I know that was something you were passionate about speaking to.
Well, just to put it, I just think it's super important because it's something I'm still learning about. And I feel like there's so many experts here that can speak about it better than I can. But basically the idea is if you're investing in one round, being able to have the right to continue to invest and maintain what you own. But I'm looking at everyone nodding. And so I feel like we've got so many experts here. If someone else wants to get into a little more detail about that, I just wanted to make sure we talked about it.
It's a great point, having a look or having the option to invest in later rounds, because if you have a small check and your net worth is whatever it is, and you can only allocate so much capital, you might not even get exposure to that type of deal unless you do it early. And so there's something really significant about when you look early stage, the types of deals you can get into, it's really tremendous. So maybe I'll open it up if anyone else wants to speak to, how does equity work? But maybe before I do that, I want to reiterate, it's illiquid. It can take many years to potentially even get an exit. What does an exit maybe look like? It may be partial liquidity or full liquidity. It may be, the company gets acquired, or maybe they're on path to, or they want to IPO. There's many different scenarios here. And, we're really just kind of scratching the surface here. But anybody else want to dive in before we move on to our next subject? All right, I'm going to keep us going then. So basics around diligence, things to look for and things to look out for. This is probably one of the most important areas. So let's talk about, maybe sourcing, things to look for when you start doing diligence. I do want to make the point, because I have run deal sourcing for a private equity player that would look at, over 100 deals to invest in one. Sourcing and looking at deals, you don't want to just look at a deal and say, hey, this is the only thing I see and I want to write a check, right? That's negative selection. You really want to spend the time to look at various deals and make sure that, especially while you're ramping and learning, you're working with others who've already done it. There's a lot to learn, and we continue to learn, I'm sure, all of us after, even a decade plus of investing. So maybe with that, I'm going to open it up. Amy, do you want to jump in a little bit around key areas that Denver Angels looks at? I know that was something you wanted to speak to.
Yeah, sure. And this is just one example. There's a lot of groups and investors that have different approaches, but when we have a whole pipeline of companies that we're always talking to. We actually invest in 2 companies per quarter on a regular basis. So probably every quarter we're looking at 10 to 12 companies really deeply, but then a bigger list beyond that. We're just waiting for them to hit that growth point to where it's like a good fit for the group. But yeah, when we first start the diligence process, I mentioned revenue traction. We're looking for 500,000 in revenue from trailing 12 months, and a few other key pieces. But once we start to dive in with them more, we look at kind of some key areas. One is the founders and the team. The others is financials, past, but also future projections. Where are you heading? Obviously, it's hard to say 5 years from now what it truly is going to be. But then there's other just general, what are the terms of the current round? Have you raised, past rounds? Can we talk to investors on the cap table, as Brian mentioned, and get more familiar with what they loved about the deal? I think there's also just this other general legal bucket that, looking at patents and diving into things that Jackson on my team, he's general counsel, and I put him in charge of that because he's really good at it. But just kind of starting to look at that, looking for patterns. It also is very different depending on the industry. So for example, Denver Angels, we really focus on consumer products, clean tech, fintech, sports and esports. And then there's some others that fall outside of those sectors, but CPG is very different than, sometimes a fintech company. So you really have to start to know, get some experts, talk to other investors that are really focused on that space and understand what are the key metrics that you should be looking at as you dive in.
Sure. The number, by the way, of outreach I get over things like LinkedIn, where it's, biotech or medical device, and it's stuff I don't know. I mean, there's just nowhere to start. And so having a background where you can start to build confidence and know what you look for in terms of diligence, it's key. Emily, do you want to dive in around RVC and what you look for and maybe add to what you just heard from Amy?
Yeah, well, and here's the distinction between maybe individual angels who are not the Mark Cubans of the world and angel investing groups like DA and like RVC. In many ways, our angel investing groups function kind of in between the individual angel or even kind of the friends and family angel and one of these early stage institutional VCs because of deal flow and diligence. I think reasons to affiliate with an angel group include that. So similar to Denver Angels, we have a pipeline. We have about 1,500 companies in our universe every year. Of that, about 80 will pitch and 25 to 30 will receive investment from the group. That kind of getting away from that negative sourcing, that kind of, conversation with your friend or your niece who's starting this new company. This sounds great. Maybe we'll never see this again. There's a level of professionalism with these groups that, you have the professional diligence process. You have the opportunity to get involved, but you also have support from others in the group. You're still making your own decisions, writing your individual checks, but they're going through this infrastructure that allows for more capital to be syndicated, for more of this kind of professional level deal flow process, which I think is really exciting for us as angel groups. To one other point with that too, I think like Denver Angels, RVC is industry agnostic. So we will invest in everything from consumer products to medical devices to clean tech hardware. And there's always somebody in the group that has that expertise, that has the resources to properly diligence that company. Get these angel investing groups lowers the barrier in a lot of ways to be able to invest in a med tech company that you're really excited about, but it's way outside of your knowledge base.
No, that's awesome. And I think you bring up some really good points and also reinforce, the fact that there's a lot you can de-risk around and learn, when you're working with a group that has a lot of knowledge and a lot of resources, where it basically expands, what you can see in terms of deal flow and everything else. A few other things, just to mention quickly, if there is no data or, with any concept, there's digging into the founder. It's, digging into mindset and, what drives them. It's, product market fit or, credentials. Why are they starting that business? So many concepts we could talk about. But again, I think we're just kind of scratching the surface with some of this. But I want to bring it back to the question of, some of you have spoken about some things driving your deals or your investor checks. But if you haven't yet spoken of that, and if you want to speak to sector or market or, something that's of focus and you haven't yet answered that one, I'd love to open up the floor. So maybe Brian, for example, I know you've spoken about the structure, but you haven't necessarily called out, what you look for.
B2B software. Which is a pretty broad mandate, it turns out, but not nearly as broad as sector or industry agnostic, right? So given that we're a fairly closely held company with people's money, we had to convince to do a thesis. It wasn't, hey, we can go understand every business out under the sun. It's businesses that look like this, which then enable us to source in a very focused manner and analyze and evaluate in a very focused manner and see patterns or learn along the way, right? So that's us, B2B software, again, which is very broad, all different sorts of product applications in markets served, enterprise customers, small business customers, what have you. But with the core underpinning of selling a software product to another business, which, has its own dynamics and own metrics and own things to look at and own other capital sources, right? And really building and being part of an ecosystem that shares an aligned kind of investment view, I guess, even if they're providing equity and we're providing debt, let's say. But that's how we think about focus.
Yeah, and listen, I mean, I come from the tech world, so I totally get it in terms of margins, in terms of, the ability to scale. Tech and SaaS are like truly amazing. So it's been really interesting getting involved in some consumer deals, which, by the way, some of them have already done well. Thank you, Denver Angels. But honestly, there's so much to learn, and I'll say that you may be leaning in a certain direction because you know something, but don't shy away from learning new things, because it's
so like for me, that makes me think. I mentioned I should be more engaged with DA and RVC because of what you guys just communicated, right? The first angel investment my wife and I just did was in a consumer products company, just so happened, right? Because we're new parents and they have a product that we use. It was like, oh, cool. And we got the opportunity to somehow angel invest into it. So I think for me, it comes back to the concept of I'm very risk on in B2B software through my own company. So if I can dabble in other areas where there is more support around me that Bigfoot doesn't provide, that's appealing to me.
Awesome. Thanks so much. With that, I think we're going to quickly get to the Q&A in just about a minute. I will summarize some takeaways. I will summarize some actions of what you can do out of today if you're interested over email, because I want to make sure that we have time for some live Q&A, and we are coming up to the hour. So what I'm going to do quickly is launch a poll, because we would love to learn a little bit more about what you think of today. And if you want to jump into another event in the future. So I'm going to give you just a minute to respond to that. And I will also circulate the responses to the panelists. I'm seeing the data come in. Thank you. All right. I know this is quick, but I'm going to give it just a few more seconds because I want to leave time for Q&A. All right. So with that, let's move over to live Q&A. As I said, you do have the ability to ask questions via the chat. And then if you wanted to come off of mute, and if you want to share your screen, we're also, happy to do that if you like, but no worries. And thank you so much for joining today. This was such a great conversation. I think we covered a lot in a little amount of time. And so I want to make sure that we thank the panelists who provided a bunch of great information. And I know that, jumping on Zoom when everybody is on Zoom all day long is a lot to ask. So thank you for being here. All right, so let's see. We have a few comments. Any thoughts on the fintech sector? And that's anonymous. It's a pretty kind of broad question. I don't know if anyone wants to dive in on that one.
I'm happy to dive in. We do some fintech work. So I think it's a great space. I think that industry as a whole is primed for disruptors. I think there's been a lot, especially on the technology side of things, that have been what we would call wildly slow in making shifts to adopting technology. And so I personally think it's a go, and there's going to be more and more opportunity to disrupt in that space.
Yeah, and I would actually add, I'm looking at a play in fintech. It's specifically within the accounting space, and the TAM, or the total addressable market, is so big. I looked at it and said, wow, and there's so many exit opportunities in terms of if they want to get acquired or they want to go public, and it's early, but it's just such an interesting one. I have a fintech background, and for years, I actually haven't done much in fintech. So it's kind of exciting to get back on the radar, but that's a pretty broad question. I'd have a lot of questions for you. around the business and the scope and all the other things. There's so much you can do in terms of diligence. But thanks for weighing in on that one. Any more questions? Oh, let's see. So we have another one that says, grateful for you all. Thank you. Have you been the first angel to jump on the board in a company? What are some motivations to take the risk in a startup? Anyone want to field that one?
I have not.
I will say, so I've played on the private equity side where you're writing kind of bigger ownership checks where you maybe buy the whole business or a big piece of it. Whereas angels, a lot of times it's a smaller, portion that you ultimately have ownership around. So some angel groups, you will take a board seat. An individual check, you're probably writing a pretty big check if you're demanding a board seat. But if you align in terms of your background and what you bring in terms of value, you can definitely throw your hat in the ring. So that is something, by the way, that I have been stepping into. I'm actually going through a board certification, but really excited to step into some board seats. So I would say that I haven't yet done it, Lauren, but very excited to do so. Anyone else want to dive in before we go to the next one?
I will say I am a first angel in a company right now. They're pre-revenue. And for me, it was a personal, very, very personal product and a journey that I was on previously. And this product solves a lot of problems that I had earlier in my life. And so it was a very individually driven decision, but tons of upside potential, like Natalie said, from a market availability and a market that's prime for the type of product that they're launching.
Great. Thanks so much, Paige. Looks like we have another question. When you are asked to mentor or advise a startup, how can you know that you are giving it enough time? Interesting. So I do this a lot, so I might start to answer it, but I definitely welcome if anyone wants to contribute here. I think it's really important to level set around expectations. I know right now, for example, that I'm doing a lot and sometimes too much, but having those boundaries and establishing what is alignment, what is success, what can you do, what do you want to do, and also feeling good about what you get. So what do I mean by that, right? Is it advisory or are you also helping with execution? Very different things. So making sure that you actually define it, making sure that it aligns with, what you've done. And by the way, you don't have to know everything when you step into a role, but having that expectation, kind of set with the founder or whoever you're working with. And then also knowing that you want to put in the work. I mean, those are really important things, I would say. Anybody else want to weigh in on that?
I'll just say I'm still, that's an area of growth for me, and Carrie's really inspired me on learning more about how, like, the path to becoming an advisor or a board. I haven't even started that journey yet, but she's been really working on that in the last year, really clearly defining her path to get there. And now she's an advisor to some incredible aerospace startups, but she had to get started somewhere too. So I think, one, I'm learning from Carrie, and we had an amazing mutual friend that connected us, and he's been a mentor of mine for a long time. So just going back to mentorship, I don't have that experience yet, but there are ways to get there, and just find others who are doing it, like Paige or Carrie, and just pick their brain if you have a chance to speak with them.
Great. And we have another nice question around how to get involved if you aren't currently in a position to become an investor. And I think this will actually speak a bit to, in the follow-up, we will send some takeaways and some things to think about, if you want to start aligning yourself with or starting to think about, becoming accredited. But listen, again, we're not financial advisors here, and we're giving you kind of some thoughts and some insight. But I guess maybe just then to ask Emily and or Amy, can people get involved? If they're not accredited, are they able to drop into some events if they're not the writing check events? Emily, do you want to dive in?
Yeah, so I know on our VC side, we basically exist to educate and connect investors and entrepreneurs. So you don't have to be the check writer to come to a lot of our events, either networking, learning through our classes, mentorship. To go back to that is an awesome way to get involved. We run programs like a 1 week hyper accelerator program that we source mentors for. There's also other Colorado-based, Denver-based organizations. I mentor for Genesis, which kind of does the pre-startup kind of founder problem fit. I also mentor for the Watson Institute, which is out of Boulder and is kind of a Excel semester program for young entrepreneurs around the world. So that mentorship is an awesome way in, awesome way to see that you probably know more than you think you do about helping these companies, which is always fulfilling. And then another piece of advice that I got coming into this space was, even if you're not accredited, even if you don't find a space within this, get started on small investments, get started on equity crowdfunding platforms. I think those have a lot of limitations, but it also helps you test out, what does it feel like to write a check, even if it's only $100? What does it feel like to diligence a company, even if you're not able to speak to them face to face? Starting to develop a portfolio and a story around that is another great way to kind of dip your toe.
Great points. Thanks so much for weighing in. Anything else, Amy or anyone else would like to add there?
No, I'll just say, Emily brought up the equity crowdfunding. There's a lot out there. We have companies in our pipeline, but also our portfolio that have done some of those. There's a new thing called Reg CF, and I'm definitely not an expert in it, but you could go search and narrow your filter by Colorado companies and just start there and see which Colorado startups are doing crowdfunding, and just, you can put much smaller amounts in there. So that could be a way to get started, not necessarily through Denver Angels, but just focusing on Colorado and supporting local. We don't have any community events right now, but we're starting to do more panels like this and connecting with the community. We have internships with CU Denver and Boulder. So if you know college students that are interested in this field, that could be another way to get involved. But right now we are a closed group to accredited investors. We are growing very quickly. So there may be opportunities in the future to plug in and volunteer or take on other roles. But I think RVC is amazing, and they put so much good content and educational programs out there for people to get started and network as well.
Great. Yeah, no, I think you both covered some really important points there. So thanks so much. Any more questions? We are up to the hour. So if we don't have anything else, I think I'm going to let our panelists and participants get back to their days. But this was great. And I will summarize and provide some calls to action in an email follow-up. So thank you so much. And I'll also mention, we saw that a lot of participants have interest in a mini case study. So maybe that's something we'll talk about for another event. So definitely check back. We'll send you an email, but make sure to sign up and get involved. They're different organizations. And so we will see you in the near future.